Good morning, everyone, and thank you for joining us. I'm Olivia Rios, Director of Operations and Programs at the LA Latino Chamber, and we have an exciting program for you. In today's webinar, you'll learn about SBA loan programs, benefits, and how to grow your business. This morning, we have two experts from US Bank, so get ready to take some notes. I'll begin with Eddie Reyes, who is Vice President, Relationship Manager, and the Chamber's banker, and Sean Thompson, Vice President and Team Lead for the SBA division at US Bank, where he oversees a team of business development officers in both Northern and Southern California. Sean has honed his expertise in SBA lending. He and his team specialize in SBA 7A, SBA 504 loans, and provide critical finance solutions for small businesses. Sean's leadership and extensive experience make him a pivotal in the SBA lending landscape. And Leslie will introduce our newest addition to the LA Latino Chamber team and consultant, Wilmer Jurado, who is our internal loan packager. Wilmer's experience in banking covers over 18 years and understands conventional lending, SBA 7, SBA 4, asset-based lending, and constructions loans. So combined, these gentlemen have over 52 years of banking experience combined. There's so much info that we want to dive right in. So before we start, we ask that you mute yourself, ask questions in the chat box. We'll have a Q&A at the end of the session, so hold on to your questions. Welcome, gentlemen. We're so excited to have you all with us. Eddie, can you introduce your team? Because I know they have a wealth of experience and everyone who's here is really dying to get information.
Thank you for the invitation. Always love to share information here at the Chamber events. Well, good morning. My name is Eddie Reyes. And again, thank you for joining the webinar today. I'm a relationship manager with US Bank. And what I do is I work with hundreds of successful small business owners every day to help them realize their financial goals and dreams. It's an awesome job. I love it. I love working with small business owners, really have a passion for it. So again, thanks for the opportunity. Over the last year, US Bank has actually partnered with the LA Latino Chamber of Commerce and has hosted several webinars on topics such as equipment financing, access to capital, understanding financial statements. A few months back, we even did a really in-depth planning session with the chamber on a couple of things. So it was really neat, right? In addition, if you're ever interested in any of our past webinars, they're actually on the LA Latino website. On demand there. So you're more than welcome to go in there and take a look at these really wonderful topics. Today, I'm really excited about today's webinar, right? So it's really around SBA lending. I'll tell you that the SBA program is definitely a game changer for our small business owners, right? It's a real win-win because both the small business owners, the economy, the bank, everybody wins when you take advantage of this type of program. Now, for purposes of today's presentation, there's a lot of different SBA programs out there, but we're really going to be focusing on the SBA 7A and the 504 programs. Okay. One of the things that as I think of SBA, one of the things I think about is that, there's a lot of misconceptions out there, right, about the SBA lending program, how they work, what can it be used for, when is it appropriate to apply. So hopefully we're going to be using, today's webinar to demystify some of that information, right? That way you have some good clarity and can prepare and obviously encourage you guys to apply for these programs in the future, okay? And then towards the end of the presentation, I'm going to share a real life example of a client that we just approved and funded, which is really neat. So please stick around to the very end. In addition, on the bottom right-hand corner of every slide, there's a QR code with my contact information, just in case you have any general information. You're more than happy to reach out to me as well there. Well, now to the expert. So today I actually invited a wonderful partner of mine here at US Bank who breathes, eats SBA all day long. Sean Thompson is an outstanding partner, very knowledgeable. He runs actually the SBA program for Southern and Northern California, has a team under him that actually does that. So he's able to share that wonderful knowledge he's experienced over the many years and teach that to his reports there. But with that, Sean, I'll turn it over to you. I know we have a lot of information to cover. I'm going to pull up the deck.
Perfect. Thank you. I can see it. Good morning,
Great.
everyone. Thank you for having us. We're excited to be here. A quick plug for US Bank, really quickly. US Bank is one of the top SBA lenders in the Los Angeles market. We have several BDOs in LA and have helped hundreds of business owners with SBA lending. A little history about SBA. So SBA, I know a lot of people think about SBA, they're like, oh, it's government money, right? It's really not government money. It's just guaranteed by the government. The SBA essentially was enacted back in 1953 by President Dwight Eisenhower. It's essentially to help small businesses grow, right? But the money comes from the bank. So the bank gives you the money. It's just guaranteed by the SBA in case the business were to default on it. So the qualifications of getting an SBA loan is significantly easier than a conventional loan that is typically available in the marketplace. You can use SBA loans for various different products. Real estate purchases is primarily the biggest one that we do SBA loans for. Construction loans, renovations, equipment purchases, working capital, inventory, just a lot of different ways you can use SBA loans. But the two biggest programs through SBA is one, the 7A, and second, the 504. So let's first talk about the 7A program. So the SBA 7A real estate term loans, it helps businesses essentially retain their cash because most SBA 7A loans only require a 10% down payment, which is very unique to real estate programs. Most real estate loans in conventional worlds require 20, 30% down payments, but SBA only requires 10% down. You can use SBA 7A loans for purchases of the building. You can use it for construction. And recently, the SBA kind of eased up its policy boxes around refinances. So it's also very easy to refinance your existing real estate loans into an SBA loan. The other good thing about SBA 7A loans is that every single loan is a 25-year fully amortized loan. So you'll never ever see a balloon payment on an SBA loan. It's fully amortized over 25 years. So you don't have to worry about refinancing that loan every few years, unlike in conventional. And the good thing about US Bank offering its pricing on SBA is that we offer fixed rate pricing in addition to variable rate pricing, which is very rare right now. We don't do a whole lot of loans that's variable. Most of our loans are fixed rate. So you can fix your rates for 5 years, 10 years, 15 years, and even 25 years. And US Bank does not charge any origination fees for originating an SBA loan. The only fee you will really pay is the SBA guarantee fee that goes directly to the SBA, and that kind of helps the program run itself. And then the max amount for an SBA 7A loan is $5 million on the 7A program. If it's over $5 million, then we do the 504 loan program, and we'll talk about that in a second. So in addition to just your real estate loans, we also offer several non-real estate products through the 7A program. 99% of those loans are probably going to be a 10-year term. So like we talked about real estate, all real estate loans are 25-year terms, but the non-real estate product is a 10-year term. And you can use that for various different business needs. So you can use it for acquiring a business. You can buy in or buy out a partner in your existing business. You can use that loan to buy equipment. And if you're buying equipment, based on the useful life of that equipment, we can sometimes do a 15-year amortization, depending on the useful life of that equipment. We can refinance debt. Existing current debt of the business. If you are a business owner that needs tenant improvements, you don't own the property, but you need to do tenant improvements in your location currently, we will finance that. We offer working capital. We do startup loans for certain industries. If you're looking to purchase inventory, we will help with that as well. We do a ton of franchise financing across the board with various different franchises in the industry. And then if you're expanding your existing business too, we will help with expansion. The good thing about the 10-year non-real estate loan with SBA is that there's no prepayment penalties. Unlike the real estate loan, the 7A loan has a 3-year prepayment penalty on the real estate part of it. So if it's over a 10-year amortization, so 25-year amortization, you will see a 3-year standard prepayment penalty. It's 5-3-1, so 5% the first year, 3% the second year, and 1% the third year. But on non-real estate loans where the amortization is only 10 years, there is no prepayment penalty, so you can pay off that loan at any time. And in most instances, we don't need to be fully collateralized depending on the loan size, but SBA does have requirements on collateralization. So I don't want to get into the specifics around collateralization because it's kind of deal specific. So if you have any questions about collateral, we're happy to answer them. But on loans typically under 500,000, we don't need collateral. And in no instance do we need to be fully collateralized. So if we're getting $1 million loan, we don't need $1 million in collateral. As long as there's some collateral that we can take, it helps. The second option, like I talked earlier, is loans over 5 million typically go to the 504 loan space because it allows us, there is no max loan amount on the 504 loan program. Essentially the way it's broken up is into 2 loans. So the first loan will be the bank loan, which is technically a conventional loan. And then the second loan will be the SBA portion, which is the 5 million piece of it. So you can essentially do as big of a loan as you need. I recently did a project which was $27 million. And then the bank first was 16 million. The SBA portion was 5, and then the customer needed to come in with the rest of the money out of pocket. But normally, it's a similar kind of process, right? A similar structure. It's 10% down, so it's less money out of pocket for you. Again, 25-year amortizations on the 504 loan program too. The rates are competitive both on the 7A and the 504, and they could be fixed for the term of the loan, which is 20 years or 25 years on the 504, and it helps businesses essentially keep that money in their pocket and be able to purchase real estate, especially in Los Angeles where real estate prices are significantly high. And if customers can put just 10% down to get into that building and not pay rent, it really helps. So a couple of, I kind of talked about this a little bit, but I just want you to kind of understand the differences between SBA and conventional, because conventional real estate loans are very common, right? And SBA actually after COVID is also very common. Everyone knows about SBA. Prior to COVID, no one really knew about SBA. But after COVID, everyone knows about SBA. But just a couple of important key factors that makes a loan SBA eligible. So obviously SBA loans are only for owner-occupied commercial real estate properties. It cannot be an investment property. The occupancy on a 7A loan typically is 51%. So you have to occupy at least 51% of the space. And if we're doing the construction piece of it, then you'll have to occupy 60% of the space. But just keep in mind, we will not finance any portion of the loan that's going to be occupied by a third-party tenant. So it has to be fully owner-occupied in a construction piece. In conventional, your typical occupancy is 40%. The max loan to value in SBA is 90% versus conventional is 80%. We have a one-close option for construction and permanent financing on SBA loans. So depending on the loan amount, depending on the project, sometimes we can make exceptions to not having permits to close the loan. But if it's a ground up construction, it kind of makes it tougher. So it just depends on the scenarios. On our SBA loans, like I talked about, 25-year fully amortized loans. But in conventional, you're typically only looking at a 5 or a 10-year term on your conventional loans. And then fixed rate options, multiple options like I talked about, and you can fix it all the way up to 25 years. But in conventional, you can only, I think, lock it in for 15 years, not any longer than that. And on the real estate side, between SBA 7A and 504, it's very similar loan programs, right? Both of them offer 90% LTVs. The 504 prepayment penalty is, there's multiple options. There's the break funding prepayment penalty, the 54321 step down prepayment penalty, or you can buy in a full waiver on the prepayment penalty. But on the 7A, it's just standard, like I talked about earlier, 5-3-1, 5% the first year, 3% the second year, and 1% the third year. The 504 loan program is 2 loans, right? So the bank first, as well as the SBA portion. And then the SBA 7A loan is just 1 loan financed up to 90%. We can potentially roll the fees for the guarantee into the loan, right? As I said earlier, we don't charge any bank fees, so there's not going to be any fees that US Bank will charge. So you don't need to roll those in, but it's just the SBA guarantee fees. You can roll those in. And then you can include, working capital. We've had several scenarios where, the customer was moving from one location to another and was going to incur $100,000 for working capital that he's going to be needing to transfer his business for the moving expenses. And we were able to include that into the loan too. And then again, fixed terms and fixed amortization, 25 years on both these products. So that is essentially the kind of basics on SBA. We wanted to make sure we gave you enough information to arm you with, so you can make a decision for your company. But like I said earlier, every situation is unique, right? Every business is unique. And the best way to understand if SBA is an eligible product for you is to get in touch with one of us. I think Wilmer and Eddie are going to provide some information on how you can contact all of us to get information. But I think the best way to understand if SBA is an option for you is to have a conversation, because there are so many different products. And we are the experts, and we're here to help you figure out if SBA is the right product for you. With that, I will turn it over to Eddie.
Just a really simple example of an SBA loan that we just recently approved and funded. So I have it up on the screen there, right? So you can see it. But basically, it's the industry is direct mail advertising. So we were approached during the summer by a client, right? He had his personal relationship with us. It was a client of ours. And he was really looking at purchasing a direct mail business that was for sale up in Northern California. Okay. So let me give you a little bit of background on that, right? So he grew up actually working in his father's print shop and photo lab here in Southern California. So, that was, going to high school and working with his dad the whole time. Really learned the fundamentals of the printing process, film development, working with clients, all that good stuff, right? And then, went off to study at a USC, a local college, USC here, and where he obtained his bachelor's in finance, right? And, after college, he basically went into the real estate and private equity sector, did that for probably about 3-4 years, learned some business fundamentals there, how to evaluate companies, just did that for a bit, really decided that wasn't the right fit for him. Right. And actually went back to work with his father's business. Right. So when he went back, he was now armed with a bunch of new skills that he learned. And, he worked on strategy with his dad, marketing initiatives, really trying to figure out how to make the operation a lot more efficient. So, he was with his dad for probably a couple of years. And then, at that time, he really realized that he had a passion for the printing and marketing industry, right? So he was looking for some opportunities to really just expand and go off on his own and do his own thing, right? So that was really neat. So he found an opportunity, right? There was a business up north that was for sale. Again, it was a direct mail marketing. So if you think of the penny saver, probably dating myself, but the penny saver or some of those books where you can actually, businesses can actually advertise, right? And they drop them off at different residences, throughout the local communities, something very similar to that, right? And he found a great opportunity. Basically, the existing owner was about to retire, he was really trying to exit the business, and this opportunity came, right? So he approached us. We worked with them. I think the purchase price was in the neighborhood of $450,000. We gave him a $400,000 acquisition loan over 120 months, so 10 years, right? And in addition to that, we gave him some working capital line so he can basically use to manage those expenses as he's starting off the business, right? We worked out something with the owner where we were able to carry back a note for $50,000, as well. So, and I could discuss that more in detail later. But yeah, so some of the important things to think of of why we approved it, probably the golden nuggets for all of you guys is, number one, the business he bought was very profitable, right? It was profitable already. It wasn't a turnaround project. It wasn't something like that. It was already making some money, right? And and the business valued the agreed upon purchase price that they had both set, right? So we have third parties that will help determine the valuation of that, right, to make sure it all jives correctly, right? So we'll help you with all that. But it was a very profitable business. Number two, the cash flow from the previous year's financials that he provided us was sufficient to basically debt service the debt, right? So in other words, if he had that same $400,000 debt, in the last 3 years, what they were producing would be more than sufficient to basically service the debt every month or every year, if you will, right? He had very good personal credit. Took care of his credit, very little debt to no debt as well, right? So, he was really preparing himself for kind of this next stage of owning his own business. Luckily, there was a seller that was very flexible. I mean, he was already on his way out. So I was really looking to work with the buyer on figuring out how to make this work for everybody. The next one is a really important point, right? A lot of times when you're purchasing a new building, a new business, you want to make sure you retain a lot of those key employees that really have helped, get the business to where it's at today. So he was actually able to retain a very key salesperson that just really did a lot of the work for the previous owner, right? And he was able to maintain him for at least a couple more years, right? Obviously he planned for the purchase. He was saving money. He had enough for his down payment and saved that as well. So it was seasoned money. He had already saved that for a couple of years, and then obviously he understood the business. He had a really great understanding of what he was buying, right? He knew was a seasonal business that usually during the holidays, it did a little bit better, right? And he just was able to convey that to the bank, which in turn helped us really share his story a little better with our underwriting team as well. So again, this is just one of many, many deals. I mean, we could probably go on for the next couple hours on deals that we've done, but I thought this was one that was just kind of simple and we can discuss that and go over it. I'm going to turn it over to Wilmer.
I'm Wilmer Jurado. I've been in lending for the last 18 years, assisting small businesses secure financing through conventional lending and both 7As and 504s. The Chamber has brought me in to assist businesses with their loan inquiries and assist them with packaging their loan requests. So any questions that you may have, feel free to reach out. The Chamber has dedicated a business page where you can inquire about business loans. You can email us at businessloans@lalcc.org. Please be as specific as possible what you're inquiring about, what type of loan financing that you're looking for, and I'll reach out to you as soon as possible. Back to you, Olivia.
Welcome, everyone. So thank you, Wilmer, Eddie, and Sean for sharing that important information. Was there any questions that anyone in the audience wanted to ask, how the program works, or maybe a little bit about how you see this benefiting you?
Yes, good afternoon. How are you? Thank you very much for this webinar. And then I have a home-based business, and been thinking about that real estate the 7A, right? Loan. That's the one that applies to real estate. Is that to be a livable space too as well, loan, and consider that a property owned by a business?
No, so it has to be a commercial property. It cannot be a home.
Can the commercial property be converted to living spaces in there for modifications?
No, it cannot be. It has to be used predominantly for business usages, and so it has to be a commercially zoned property. It can have mixed use, so you can have like an apartment built, upstairs, and then the commercial at the bottom of the unit, but it cannot be used to live in.
Oh, I got it. All right, thank you for that.
You're welcome.
As a follow-up to that question, what if it's more than one unit on that commercial residential mixed-use property?
Great question. So as long as it's occupied 51% or more by the business that is getting the loan, then it's eligible.
So like
Thank you.
office building type of thing with employees that have, it will be like a business, it will be considered to be that.
I'm sorry, can you repeat that one more time?
I'm just saying that it will be considered a business that has more than one room available and they're used for office purposes, right? For the business.
As long as, so the percentage usage is 51%, right? So if say you have like a 4-unit building, for example, right? As long as you're occupying 51% of those 4 units, then it's eligible. But if, 2 of the 4 units and they're equal spaces, are residential units and only 2 will be used by the business, then that's not eligible unless there's some common space in there that would make it 51% for the business to occupy.
Got it. All right, thanks.
So my name is Bernardo. I was trying to raise my hand, but I couldn't just find the that button on the screen. So my question is, I bank with Chase, and I've tried to get a loan with them before, but usually when I go to their offices, they put me on a phone with somebody, and then I punch in my social security number, and then it's like an automatic thing. Is this like, if we reach out to you guys, is it an automatic thing where we have to call someone, or do we like get to jump on a call and then we're actually, exchanging information where you're actually working with us and it's not, like a robot,
Yeah.
asking us questions?
Yep, you will be talking directly to, I would start with Eddie at US Bank, and he can help you kind of go through the process on what will be the right team to help you.
What are the things that you guys are looking for? I know some businesses are owner operated, so they're generating like maybe, I don't know, between 80 to maybe 120,000 a year. How would they, or what are the things that they need? If they're trying to acquire a business, they're trying to buy a business. Say in my example, we're like shy of $500,000 a year. What are the things that you guys are looking for in terms of that? Like, is it revenue, profit and loss?
US Bank and most SBA lenders are cash flow lenders, right? So depending on what you're looking to do, whether it buy a building or if you're buying a business, if you're buying a building, then the business that's going to occupy the building needs to support the loan payments, right? So it's cash flow based. We do a global cash flow in the business. We'll take a look at the business revenues and then any guarantors, and we'll add that in as well. But if you're buying a business, then the business you are buying will need to provide you the financials, and they have to qualify. So that number is important, and it's all cash flow based.
In my case, I'm trying to hire an operations manager and an outsales representative. How would that what are the things you're looking for in for something like that?
So for any kind of, I'm assuming working capital, correct?
Yes.
Yeah, so working capital is a little tougher of a product, right? Because it's we're going to give you the money and then you will essentially do whatever you want to do with it. It's not kind of tied to real estate, right? So the typical process for working capital is, hey, what's the story, right, on the business? What have they done historically? What are they looking to do? Is there a business plan, right? What is kind of like the goal of the company? And then if you're looking to hire individuals, typically in working capital, we'll cover like 3, maybe 6 months of the salary expenses. So it's really, kind of dependent on the business itself. I would recommend, honestly, that you talk to Eddie and kind of figure out what the best possible solutions are, maybe even a line of credit, but there's lots of different options, right? Where we can get you the financing you need for your company, depending on what it is that you're looking for.
Got it. Okay, perfect. That's it for me. Thank you.
You're welcome.
There's a couple of questions in the chat I want to probably address real quickly. One of them is around just, who needs to, let me just read it out. Can you have a partner take on half the risk with the SBA loan, or does it have to be one individual? So I think maybe we could talk about just who needs to guarantee and, ownership and all that.
Anyone who has any ownership over 20% is required to guarantee the loan. If you have owners under 20%, they're not required to guarantee the loan. But anyone over 20%, there is a personal guarantee required.
Right. And then another question is if you can use an SBA loan to refinance, I'm assuming a conventional loan.
Absolutely.
Yep.
Did you see the question? We have an existing loan. Can we change over to an SBA 504?
So you have an existing 7A loan?
They're not asking. Holly, can you let us know what type of loan you have?
Yeah, it's with Genesis LA. Genesis
LA.
Economic Growth Corporation. and it was for a construction project. And
Got it.
the term is going to be up in 2026. And so looking ahead on, what the options are.
So it depends on the industry, Holly. That would be a deal-specific question. I would reach out to Eddie, and we'll can try to see if that's eligible.
Okay.
Eddie, can you share your email address, please?
Yeah, it's actually it's on each one of those slides as well. At the bottom, there's a QR code there with my email, but it's Eddie EDDIE .Reyes REYES at usbank.com.
Thank you. Does it allow you to work working capital for a new company without any revenue generated?
No,
I know-
that's very hard for US Bank, I'll be honest, to do a working capital loan for a startup company.
Yeah. Another question, what are the most important factors that SBA lenders consider when evaluating loan applications for new entrepreneurs? And how can a first-time business owner strengthen their application to increase their chances?
Yeah, so you want to think about applying for a loan should be kind of standard across the board, right? When you're looking at getting a loan, you want to make sure you have sufficient cash flow, correct? Or if it's a startup that you've done your research, there's lots of different, portals out there. One is Dun & Bradstreet. They have really, really good information on what specific industries do as far as revenue. So if you're bottom line revenue is 3%, right? Or sorry, net income is 3% of your total revenue. And when you're creating your kind of projections for your business, you want to keep in line with what the industry is doing, right? So the kind of the validity of financials that you provide to the bank is a very, very important piece. So if you're going to, work on projections, for example, for a startup business, and you have revenues that's going to be 20, your net income is going to be 20% of your revenue, but the industry average is only 2%, it kind of negates the validity of your projections. So I think the first most important thing is to get good projections, and there's a lot of companies out there that help you with that as well. Secondly, credit, right? So you want to make sure that, every bank looks at credit. We don't have any specific metrics around credit, but, you want to make sure that you don't have any bad credit that shows up on your credit report personally and for the business, right? That you haven't defaulted on loans in the past, you haven't defaulted on any SBA loans in the past. That's kind of an important piece. And then thirdly, if you are an existing business, right, it's cash flow based, right? So if you're looking to buy a building, or if you're looking to buy equipment or whatever you're looking to do, does the business support that payment? Because it's all cash flow based. That's an important piece to it. And then finally, if you're looking to buy a business, right, what experience do you have running similar businesses? SBA does require 2 years of management experience running businesses. And so if you are, a dentist who's looking to buy a cardiology business, that doesn't really, help, right? So what is the kind of transferable experience between the two? I think that's an important piece to the puzzle as well.
A question regarding the DUNS numbers. Are they still using DUNS numbers, or did they go to another system?
DUNS number, like Dun & Bradstreet numbers?
Correct, Duns & Bradstreet. I heard that they got away from the Duns & Bradstreet. They're using another type of system now.
I said a Dun & Bradstreet. I just said about like looking at industry kind of market analysis, right? On when you're buying a business, for example, or you're starting a new business, kind of looking at market analysis. I'm not talking about credit pulls. We use Experian and all these other sources, but just to kind of do market analysis yourself when you're looking to buy businesses or start.
Okay. We still have a couple more. We have a COVID idle loan and have been servicing that. Will that impact our ability to go access a 7A loan? We actually have been using the idle loan mostly for working capital purposes, and the 7A loan we want to use to buy our partner out to acquire a company.
So it shouldn't in this instance. We do, so, obviously the EIDL loans have first lien UCC filings, correct? And There have been several instances where we've been able to get the EIDL to be subordinated to the 7A loan. But if you're looking to buy out a partner, that's like a business, partner buyout loan, and it's pretty easy to have your EIDL subordinated, as long as the SBA is informed that the partner is getting bought out and you follow all that process. Just kind of adds a little time on the back end to inform the SBA to remove that partner. But if you're looking to get just a working capital loan, then that's probably going to be hard to get a working capital loan that will be subordinated by the SBA. So, but that scenario you gave should work.
Have a business plan ready, help expedite the SBA loan.
Will it help expedite it? So if it's a startup business, then you are required to get a business plan. Yes, it's going to help. A step in the right direction.
Mm-hmm.
Yeah.
You don't need a business plan for any other loans other than an expansion loan sometimes, or a startup, but all the other loans don't require business plans.
Yeah, Jesse, I would have you contact Wilmer. Do so at info@lalcc.org and put your contact information in there, and then he can contact you directly. Next question, can you share some information on U.S. Bank's SBA Express products?
Yeah, so we have our loans under 500,000 falls in our SBA small loan program. But U.S. Bank only participates, even though the SBA allows 500,000 in an express product. U.S. Bank only does it up to 350. It is typically a line of credit product, and we also offer in our branches, Eddie, right, a Project Gold product, which is also an SBA Express product. So we offer several different types of products in the SBA Express world.
Do you have to match funds in the bank to qualify for a 504 or a 7A loan?
Like have the deposits in the bank?
That's what it sounds like. Steven,
No.
is that what we're understanding?
Yeah, that's correct. Do you have to have funding in the bank to be qualified to receive the loan?
No.
Okay. And my follow-up question, what are the requirements to receive the loan if you are a startup business, or how long does your business have to be up and running to come in and be qualified for the 7A loan, because that's towards the business loan, right?
So if it's an existing business, we look for at least 3 years of historical cash flow that would qualify as an existing business. For startup loans, we just talked about it a little bit ago. You need to make sure that you have the industry experience, right? A good business plan, projections, kind of what you're looking for. We don't do startups on every industry, so it kind of depends on what industry you're looking at, Stephen. And I would say you should probably reach out to Eddie or Wilmer so we can have a conversation about that.
Yeah, Wilmer not only does 7-8 loans, and U.S. Bank does the same, but there's different resources. Last question, how long is the loan process?
That's a great question. It depends it depends, honestly. Whenever a customer says, how long does the loan process take? I say it depends on how active you are to get us information. The first step is for us to kind of review the information and kind of do our initial analysis and kind of give you our opinion on what we think will happen. And that's going to be like, collecting all the documentation and all the information and all the forms, et cetera. So that kind of probably takes a couple of weeks up front. Then when it's in underwriting, the underwriter will review the file and then come back to us with questions and how fast we can answer those questions and how fast the underwriter has a good understanding and grasp of the business. With the more detailed answers customers give, that's kind of the second step of the process. And then the third step of the process is in closing. How soon can you get insurance information? How soon can you get all that information over to the bank to close the loan? So I would say a standard, if the customer is very, involved and active and send us information when we ask, it's probably between 45 and 60 days. Right now, I will be honest, it is a very busy time for SBA at US Bank. We have hundreds of in our queue, so it is taking slightly longer right now, but standard in in a normal environment would be 45 to 60 days.
Thanks for the shout out, Patricia, on the nice comments about the presentation. We actually are looking forward to doing some more stuff. We're trying to tentatively plan an equipment finance call for the month of December. Just working, make sure we can make that fit in a little bit. And a quick plug on that: the month of the fourth quarter is a great time to buy equipment. There's some tax savings behind that, so more to come on that as well.
Yeah. So as soon as we have the dates, we'll share it with everyone. We're very transparent here at the chamber, so we post everything on LinkedIn, social media, emails on our morning calendar of events. So we want to make sure that you're in touch with everything that you do. So thank you everyone for staying with us. And on that note, I'd like to thank you on behalf of our leadership, our board of directors, our corporate advisory board, sponsors, and partners for joining us this morning. More information will come as we evolved in this SBA loan programs to help you and our community. So thank you and God bless.